Hi, my name is Meera Pandit, and I'm here with Dr. David Kelly, Chief Global Strategist of Market Insights. We've teamed up with Portfolio Insights to come up with a selection of scenarios that pose the greatest challenges to client portfolios. David, let's say we see a more left-leaning Democrat win the presidency, and similarly a Democratic-controlled Congress after the 2020 election. How do you think the economy would react to that?
Well, I think there could be mixed messages in that. I think on the positive side, I think some of this constraint in immigration, which has actually been slowing U.S. economic growth, could be lifted. You could see more immigration. That would probably help the U.S. economy achieve stronger long-term economic growth. And then you could also see a relaxation of trade tensions. Now, it depends, of course, on which Democratic candidate and exactly what the manifesto is. But generally speaking, it's less likely that we'll have this very aggressive action on trade. So that might be a positive. But there are, of course, risks also in terms of potentially higher taxes, which might slow economic growth.
Can you tell me a little bit more about what those higher taxes might look like?
Yes, I think the key question for equity markets is the corporate tax cut. Corporate taxes were taken down from 35% down to 21% as rate. That was a very big change, long overdue. It brought the corporate tax rate down to the OECD average. It's possible that could get reversed back up to 35%. And we know that that would hit earnings very sharply, and I think that would result in a stock market sell-off. Now, I suppose the flip side is that if you had that kind of stock market sell-off, I think that would do a lot of damage to the economy. You would probably see lower interest rates because of that.
Mm-hmm. Now, sticking with the equity markets, when we think about some of the campaign rhetoric that we've heard, some of it is quite drastic, particularly when it comes to financials, energy, tech. How do you think about some of the market reactions in terms of those sectors?
Yeah, I think people will be looking at winners and losers, and I think the real question is more regulation versus less regulation. So one of the hallmarks of the current administration has been the theme of less regulation. If you have more regulation, I think clearly there's a focus on the technology sector, on healthcare, on financials and on energy. So I think all of those sectors could get hurt. Other sectors, consumer durables, consumer staples, may be less affected by those trends.
Okay, so overall we're seeing some market headwinds, but also some economic stability.
Exactly.
Great. Thank you very much, and if you'd like to hear more about how this scenario could impact your portfolio, please reach out to your JP Morgan client advisor.